Imagine this. You work hard, save what you can, and still feel stuck. You ask, why am I never getting ahead? Here's the honest answer. There are tools in the economy, policies, rules, and hidden costs that often make it much harder for normal people to build wealth. I'll show you the main ones. I'll also show you what to do. By the end, you'll know the traps and how to fight back legally and smartly. Quick roadmap. We'll cover 6 big ways the system works against you: inflation and money printing, tax rules and hidden taxes, fees, fines, and small amount charges, rules that favor big players, regulatory capture, financial repression and limits on your options, privatization, austerity, and public cuts. After each one, I'll explain a simple action you can take. Ready? Let's go. 1. Inflation, the quiet value thief. What it is: inflation means prices go up. When the money supply grows faster than the stuff we buy, each dollar buys less. Why it hurts you? Wages often lag price rises, so your paycheck buys less each year. Savings lose real value. But why do governments allow it? Sometimes to pay debt, stimulate the economy, or respond to crises. It's a policy tool. Problem is, it acts like a stealth tax on everyone who holds cash. You think you're saving, but inflation quietly shrinks that money. Suddenly, your big emergency fund buys less than it did last year. What you can do? Keep some savings in accounts that try to beat inflation. Higher interest accounts, short-term bonds. Invest a small part in stocks or index funds over the long run. They tend to outpace inflation. Own things that can rise with prices, your skills, property if affordable, or a small business. 2. Taxes. Structure matters more than rates. What it is: government's tax incomes, sales, property, investments, and more. The way taxes are set often helps some groups more than others. Why it hurts you? Lower and middle incomes often pay a larger share of their money in taxes and fees than the very rich, who use legal loopholes, deductions, and lower tax rates on investment income. Payroll taxes and sales taxes hit workers hard. Capital gains tax rules can reward owners of big assets. You see the tax bill each year and feel it's unfair. Meanwhile, big companies and wealthy people use accountants and lawyers to pay less, legally. What you can do: use legal, common tax tools, retirement accounts, 401k, IRA, tax credits and deductions. Learn basic tax rules or consult a low-cost advisor. Small changes in tax filing can keep more money in your pocket. Support and vote for fair tax policies in your city and country. 3. Fees and fines. Small leaks that add up. What it is: banks charge fees, governments charge permits, and courts fine small amounts. These small items are often overlooked but add up fast. Why it hurts you? Fees are regressive. They hit small accounts harder. Overdraft fees, ATM fees, licensing fees for small businesses, they slowly drain savings. You lose $35 here, $15 there. Suddenly your $10,000 cushion is $9,800. It's tiny, invisible, and painful. What you can do: move to low-fee or no-fee banks and credit unions. Pay attention to fines and appeals. Sometimes they can be contested. Start a habit. Check monthly statements and cancel one recurring fee you don't need. 4. Regulatory capture and barriers to entry. The rules tilt the field. What it is: rules and licenses can protect customers, but they can also favor big businesses. Large firms can afford lawyers and lobbyists. Small startups often can't. Licensing rules sometimes raise costs to start a business. Why it hurts you? It raises the cost to compete. Big firms get richer. Small entrepreneurs struggle to break in. Someone with a small idea wants to start a business, but a tangle of permits, fees, and legal costs kills the dream before it begins. What you can do: start small and test ideas on the side. Low-cost online stores, gig platforms. Use community resources, local small business centers, co-ops, or nonprofits that help with permits and training. Support policies that lower unnecessary barriers for small business. 5. Financial repression and limited choices. What it is: sometimes governments limit interest rates, control where banks can invest, or keep real interest rates very low. This can be used to reduce public debt costs. Why it hurts you? Low or negative real interest rates mean savers earn little or lose value. Capital controls can limit your options to move money or invest abroad. You keep money in the bank because you feel safe, but the returns are worse than inflation. Your cash loses buying power every year. What you can do: diversify. Keep some emergency cash, but also consider safe investment options. Bonds, index funds, hold a mix of currencies or global funds if allowed. Protect buying power with skills and income that grow over time. 6. Privatization, austerity, and shrinking public support. What it is: selling public assets, cutting services, or shifting costs to citizens can reduce public support systems, healthcare, education, transport. Why it hurts you. When public services shrink, people must pay privately for care, school, or transport. That's more pressure on budgets and fewer safety nets. Public transit fares rise, school fees go up. Suddenly, your regular costs spike, and your ability to save collapses. What you can do: use community programs, public libraries, and local services to lower costs. Get involved with civic groups that push for better public services. Budget for rising costs and prioritize high-impact spending first: housing, food, healthcare. Why this matters and what to do now. None of this is magic or a secret plot. These are policy tools and market rules. Sometimes they're used for good reasons. Sometimes their side effects make life harder for ordinary people. But knowledge is power. If you know the traps, you can plan around them. Simple action plan. This week, check your bank and cancel one unnecessary fee. Move X dollars into a higher yield savings account. Even a small weekly transfer helps. Pick one skill to invest in. Free courses count. Start a small test side income. Even $100 a month proves the idea. Join one local or online group that fights for fair financial rules. If you want a printable checklist for these 5 steps: emergency fund, tax moves, fee cuts, side income test, and investment starter, I'll drop it in the description. Subscribe for more clear, practical finance lessons. Tell me in the comments, which of these traps surprised you most? I'll read and reply to a few. Stay smart, stay steady. Don't let hidden rules steal your future. And if you want to be a millionaire in 2026, then don't miss this video.